but base metals he's completely short, and he believes they'll continue to go down. It doesn't overdo well for global demand. Nevertheless, okay, let's get in. A domestic voice, a big one at that too. Balasubramanian, CEO of Birla Sun Life AMC, joins us right now on the show. Bala, good having you. Thanks so much for joining in. A brief cheer today as a result of what the Reserve Bank has done. But do you think that is what it will be? Brief?
Yeah, I think it's something which is came as a surprise. I think that's purely the confidence probably the central banker is able to build on the inflation the trend as you move forward. So that I think is clearly giving him some kind of support for him to cut the rate. But as it is in the last policy, he had mentioned somewhere in the document that any rate cut in future need not necessarily be coming through the next policy. It can even come outside the policy. So therefore, probably I would assume it is an endorsement of the inflation coming down. Also the endorsement of whatever the action that is being taken in terms of bringing down the inflation. And then the third could be the endorsement of the view that is being emerged currently, taking into account the oil price coming down globally, as well as there is now a fear of deflation scenario. Especially in the global market. I think it's a combination of all these things. Definitely I think has given us a surprise. I also believe that of course it is also the Sankranti, the new beginning. It's coming at a time where one should feel probably happy that the good beginning, the beginning of the year with the rate cut means that probably the trend is getting set for a comfortable interest rate scenario as you move forward. And definitely it's the cheer the market. I think you are seeing it the way I think the market too have reacted for this.
Bala, good start to the new year indeed, but you know what Neeraj was trying to get to was, does this seem like this cheer could be short-lived because the world is in a different space altogether? You know, we were just chatting with commodities guru Jim Rogers, and he was of the belief that commodities are just witnessing the beginning of a long bear cycle. What is your own sense? Can India really decouple itself at a time when global commodities as well as equities are in a slump?
Yeah, I think this is pretty interesting from India point of view. One side we are seeing the largest the consumption which India has got, which is in oil. It's scrapping out clearly. Logically speaking, it should benefit big time for India in many ways. One, of course, it's increasing the disposable income in the hands of people. The overall margin for the people which got impacted last few years because of high oil price, high fuel prices. Do have now positive impact on those industries, clearly benefiting them. And second is the commodity prices coming down, especially the copper and other metal commodities prices coming down. Yes, it could have some impact for Indian companies. Not that they are exporting, of course. It's mainly because of the price, which if it falls globally, we need to also become competitive when it comes to the question of pricing in domestic market. But also, I think to some extent could be a win-win situation for manufacturing sectors in general, because at the end of the day, these are the items that will also be consumed by actually the Indian public, especially at a time when India is going to expand the investments in infrastructure building capability as we move forward. Having said that, I think as we always been saying that money is fungible. Anything that happens in the world will have an impact on India also. At the same time, I think India is at this point of time seems to be focusing more on execution. That just being the single point mantra, as well as bring back the economic growth back to about 5.5 to 6%. I would assume this point of time, while we cannot completely say will be completely decoupled from the rest of the world, but there is a high probability that impact on India to what is being seen in the global market, I think could be relatively lower. I would assume so.
So what happens to sectoral moves then right now, Bala? And does it seem like leadership could stay with banks and the other rate sensitives as well? You could see a big recovery plane in autos, and realty too, at least today, is holding out.
True. I think it's very interesting. We have been, of course, analyzing it for quite some time, and then we also came out with the report as an outlook for 2015. I think one of the things which was clearly emerging from the whole the discussion and the debate what we had internally I think clearly we're moving away from the last 6 months to 1 year move that has been largely driven by hope, optimism, as well as on the cyclicals recovering big time because of the government initiatives, as well as the favorable inflation scenario will bring down the interest rate as well. I think having said that, I think there is a significant proportion of the market which are largely driven by the earnings of the companies, on the fact that I think they probably will see actually the volume growth coming back as we move forward, and as well as the earnings will start rising because of the interest rates reductions, as well as the overall kickstarting the economy will also actually boost the overall profitability of the companies. Also coinciding with the expectation of GST getting implemented in 2015, maybe as we move forward 2016-17, we will see the benefit of that also is coming in. So in totality, if you look at it, I think clearly the broad market, yes, cyclicals would continue, banking and banking financial services sectors would continue, auto and service sectors will continue. Also, given the fact that we are seeing actually the oil price coming down is benefiting big time for all those companies who had directly correlated to the oil price movement. Also, we will see some kind of significant benefit because input cost is coming down for them. I think some of the companies also falls in the space of even FMCG sectors. One of the interesting analysis we had, most of the companies, the packaging cost also have gone down quite significantly because they are directly related to the petrochemical prices and so on and so forth. Ultimately, I think it will have to be driven by the earnings, need not be necessarily only by the broad macro economic variables driving actually the broad market movements.
But Bala, just wondering, are you seeing more from a capital market perspective very quickly? Are you seeing some flows into the equity linked products even now? Because the sentiment just seems to have ebbed a little bit in the month of December.
I think clearly, Nero, I think the flows have been pretty good, and the confidence of investors as we go on a roadshows, meet with people across the country, it's very good actually in terms of coming into the capital market, and we have seen a continuous inflows into the equity across mutual fund schemes. I'm also quite happy to see the whole of this year, especially in 2014, the industry has clocked almost about 55,000 crores of net inflows in equity. Next year we are projecting close to about a similar kind of trend even to exist in 2015 also, which means that the acceptance level at the ground level is far superior in participating in equities and asset class, as well as on other schemes such as MIP, etc., which essentially means the larger participations I think seems to be continuing, and probably will only see some scale up happening if you see I think some of the news flows as we have seen today continues to remain even 2015 also.
Bala, good chatting with you. Thanks much for taking time out and speaking with us today.
Thank you.
Okay, let's revisit what the Nifty rates are then at. We've eased out